Welcome everyone. Thank you for joining us for today's webinar. Welcome back to Infrastructure Connect Digital Series, a series of activities from Indonesia Infrastructure Week, Konstruksi Indonesia, and Beton Indonesia 2020. This event is accessible through the Digital Infrastructure Connect platform from 21st October to 3rd December 2020. Register yourself on infrastructureconnect.id to get an access. My name is Farah Karimas, your MC, and please allow me to inform you that during the webinar event, participants can ask questions through the Q&A feature, which is located at the bottom of your screen. Please mention your name, your company or institution, and also the question addressed to which speaker through the Q&A feature. You can ask the questions in Bahasa, and we will translate and answer in English. The moderator will select some of the questions that will be delivered to the panelists. And last but not least, the rules for obtaining e-certificate and presentation material will be delivered at the end of the event. And now, before we start the webinar, please join me to welcome Mr. Michael Lazaruk, Senior Trade Commissioner, Embassy of Canada to Indonesia and Timor-Leste. Mr. Lazaruk joined the Department of Foreign Affairs and International Trade in 2001. He is currently Consular Senior Trade Commissioner at the Embassy of Canada to Indonesia. And prior to his arrival in Jakarta in August 2018, Mr. Lazaruk was Senior Trade Commissioner and Consular at the High Commission of Canada to Australia, 2013-2018. Mr. Lazaruk has previously served abroad at Canadian embassies in the United Arab Emirates, 2008 to 2011, and Saudi Arabia, 2002 to 2006. Mr. Lazaruk, the screen is yours.
Thank you very much, Farah. Appreciate the introduction. So good morning, bonjour, selamat pagi, dan selamat datang di acara webinar kami. I am delighted to open this webinar by welcoming representatives from two of Canada's largest pension funds, La Caisse de dépôt et placement du Québec and Ontario Teachers Pension Plan, as well as the local subsidiary of Canada's largest insurance company, Manulife. I would also like to welcome and thank our partners at the World Bank for agreeing to moderate this session, which promises an informative and engaging discussion. This morning's webinar will showcase Canada's extensive experience investing in infrastructure as an asset class, including direct investments in infrastructure projects. Indonesia is an important and dynamic market in Southeast Asia and a key trading partner for Canada. To realize its development potential, Indonesia's National Midterm Development Plan identifies a need for about $430 billion between 2020 and 2024 in order to improve connectivity and construct key infrastructure projects in the country. However, it is anticipated that the government might only be able to finance 30% of the projects using state budgets. It is therefore necessary to attract alternative sources of funding, such as from private, commercial investors, and foreign institutional and sovereign wealth funds to help bridge that funding gap. Canada is a leader in institutional infrastructure investing. Canadian pension funds have been active in the field since the 1990s and have played a leadership role in direct investment in infrastructure since the 2000s. Institutional investors have pursued infrastructure investments for a variety of reasons, including lower cost than external infrastructure funds, direct control over assets, including entry and exit decisions, long-term investment horizon to optimize return and liabilities, and finally, often inflation-linked cash flows. The main driver for Canadian infrastructure investing was a wish to diversify pension funds' assets beyond traditional asset classes. The search for new ways to generate yields after years of ultra-low interest rates and expensive asset prices has led to a continuation of this trend. As a result, Canadian institutions have been turning to investments in assets like pipelines, utilities, and roads to generate stable cash flows. Today, Canada continues to have amongst the highest asset allocation dedicated to infrastructure by pension funds around the world. And now we are seeing, some investors like Manulife choosing to manage those assets for others to generate additional revenue. Like Indonesia, Canada continues to be faced with challenges of building and financing public infrastructure assets that meet citizens' expectations of quality and value while standing the test of time. Canada continues to work in partnership with organizations such as the World Bank in assisting Indonesia to develop capacity in areas such as public-private partnerships to achieve its infrastructure development and poverty reduction goals. Recent policy and regulatory changes such as the Omnibus Jobs Creation Act and the Presidential Regulation on Limited Concession Schemes send encouraging signals that Indonesia has taken on board some of the feedback provided by international partners and investors. Creating a welcoming business environment builds greater confidence among investors and de-risks projects to create a more robust project pipeline. Canada greatly appreciates the aforementioned policy changes adopted by Indonesia and hopes to grow and strengthen our bilateral commercial relationship through the launch of negotiations towards a comprehensive Indonesia-Canada Economic Partnership Agreement. In conclusion, we see this webinar as an opportunity to share Canadian best practices and lessons learned in infrastructure financing. It will also hopefully provide important insights into the priorities of some of Canada's large institutional investors and the factors that drive their investment decisions. Thank you all very much for participating, and I wish you a fruitful discussion. Terima kasih banyak.
Thank you very much, Mr. Lazaruk, for the opening remarks. And now, moving on, today we will be discussing about alternative infrastructure financing in a post-COVID environment. And present with me today as moderator, Mr. Jeff Delman, Senior Infrastructure Finance Specialist, Infrastructure, PPPs and Guarantees, World Bank, Singapore. Please allow me to read a short biography of Mr. Jeff Delman. He has advised government, sponsors, and lenders on infrastructure finance and PPP across Western and Eastern Europe, East Asia, South Asia, Africa, and Central America since 1994, and has been a senior PPP specialist with the World Bank since 2005. He is currently based in Singapore, and prior to joining the World Bank, he spent 11 years in Paris and London, advising on infrastructure and PPPs projects globally at the law firm of Allen & Overy and Freshfield. And he is also an author of numerous books, articles, and blogs on PPP. And now, without further ado, I will turn the time over to Mr. Jeff Delman to lead the discussion. Mr. Delman, the screen is yours.
Excellent. Thank you so much. And thank you everyone for joining us today. Looking forward to a really, really interesting conversation. We've got a great session today with three panelists from some of the biggest pension funds, some of the biggest institutional insurance funds in the world, who focus very much on infrastructure. So, Michael mentioned the huge deficit in Indonesia and all the investment we need to mobilize, and that the government really needs to tap new sources of that financing. And the people that are speaking today are exactly the sources of some of that financing. It's long-term, which matches infrastructure really well. They like nice, even returns, which matches infrastructure really well. But the divide between the investment opportunities in Indonesia and these institutional investors is still quite wide. And so we're looking forward today to getting their advice and their wisdom on how we do this well, how we do this better. This session is only as good as you, the audience, the questions that you ask. So put in the Q&A box, ask all of your questions. Don't forget to tell us who you are and where you're from, so it'll help us contextualize a bit, and it'll help the panelists answer your questions better. So let me start right away with Cyril. Cyril is Managing Director for Infrastructure in the Asia Pacific for CDPQ, which is one of the huge Canadian pension funds. He's based in the Singapore office. He's been working on infrastructure finance for 23 years. Before CDPQ, he was Senior Vice President at Marubeni. And before that, he spent 10 years in investment banking at RBS, BNP Paribas, and UBS. So huge, broad experience and a great person to be leading off today. Cyril, over to you.
Thanks, Jeffrey, and good morning to all. It's a pleasure and a privilege to be here with you today. Apologies, I was a late entrant into the call today, so I think I gave a few cold sweats to the organizers. I apologize for that, but hopefully everything is working okay now. Thanks, Jeffrey. I think we've got 10 minutes, and I just wanted to give you maybe a broad outline of what CDPQ is about and what we've been doing in infrastructure globally, but also more specifically in the region. Before I go into that, really quickly explain, where I come from in this overall piece. So I've been managing the Asia Pacific infrastructure business for CDPQ for now close to 5 years. Came with a remit of effectively building our presence in the region and with a very, very broad focus. We operate now in the region out of 3 offices: Singapore, which is our regional hub, New Delhi, and Sydney. So effectively focus, very broad Asia Pacific focus. We have a team now in Asia Pacific of around 25 professionals just for infrastructure. So that gives us, reasonable reach across the region. And we have a portfolio of around 7 billion Canadian dollars of investments spread across basically Australia, India, and North Asia. And we have spent a considerable amount of time in Indonesia in the last 5 years. I mean, Indonesia has been very dear to my heart. I've been coming to Indonesia to do business for over 20 years now, actually. And Indonesia is an extraordinary place that has phenomenal potential, not to mention amazing people and amazing culture. So it's always a pleasure to be involved with Indonesia. It's always a pleasure to be in Jakarta, although at the moment it's sadly not possible. But I'm very hopeful that we might be able to be back in Jakarta very soon. So I guess that's the background, and I might just share the presentation. Hopefully everything goes smoothly. And of course it's not. Can you guys see the presentation?
Yeah, that's perfect. Thanks.
Okay, good. So it is working, which is good. So maybe just explain who CDPQ is. We're a Montreal headquartered pension fund manager or asset manager. We've been in existence for more than 50 years, 55 years. We represent effectively the capital of around 40 institutions based in the province of Quebec in Canada. So we're not strictly pension or sovereign. We're effectively a collection of public and para-public money, including pension funds, sovereign wealth funds, Ministry of Finance. As of 31 December 2019, we had 340 billion Canadian dollars under management. You've got the breakdown on the chart of how we allocate that capital. It's pretty straightforward. It's quite consistent with people of the same size. But what's actually quite unique is around 90% of our assets are managed in-house. So we've been effectively a direct investor, and in some cases a direct only investor for a long time. We were one of the first sort of pension fund managers, if you want to call it that way, to go direct into certain asset classes, including infrastructure. So we've been a direct investor in infrastructure for more than 20 years, and we've been direct only for about 18 of those 20 years. You've got our return. So we generate about 8% annualized return for the last 5 years, which created about $106 billion of value. And we're AAA rated, which is an important point in terms of credit enhancement and access to markets. This is our global footprint. It's expanded quite a bit in the last few years in an effort to be more global. and our approach. In this region, we operate out of 4 locations: Singapore, which is our regional hub; New Delhi to cover India; Shanghai to cover China; and Sydney, focused primarily on Australia and New Zealand, obviously. Maybe just focusing on our infrastructure program, which was around $28 billion as of 31 December 2019. It's gone up a fair amount. We're north of 30 billion now. That makes us among the 5 largest institutional investors in infrastructure in the world. I think we were recently ranked 2nd in a recent survey. I forgot which publication put that out. We've been doing this for about 20 years. Some examples of some of our sort of flagship assets. We've been an investor in Heathrow for quite a long time with a 13% stake. We're one of the largest shareholders. We invested in the New South Wales transmission network called Transgrid back in 2015. We own 65% of Invenergy Renewables, which is the world's largest independent renewables developer. Invenergy has developed around 20 gigawatt of projects over the last 15 years or so. And just to finish off quickly, we've had a joint venture with DP World, which is a global joint venture focused on container terminals for about 5 years now, which has deployed a lot of capital in a large variety of countries. And we've just recommitted a large amount of capital, effectively doubling the size from $5 to $10 billion US of this platform in the last few months, which was, I think, announced publicly. So I think that's really us in a nutshell. Really quickly, going through some of the large asset classes, we're also one of the largest real estate investors globally through a subsidiary called Ivanhoe Cambridge, around 40 billion Canadian dollars as of 31 December 19. We have a large private equity portfolio, around 50 billion Canadian dollars. I think the difference between infrastructure and private equity and real estate is both real estate and private equity have a blend of direct investments and fund investments, whereas infrastructure has been direct for a long time. And we have what I would call loosely a fixed income portfolio of about 100 billion, which is a blend of traditional fixed income, but also increasingly corporate credit, structured finance, financing solutions, which is a global trend, effectively to look for more yield in more structured transactions and effectively replacing traditional lenders in a lot of contexts. And the largest portfolio still remains equity markets, about 117 billion as of 31 December. So I guess that's us in a nutshell. Just maybe talking about what we've done in infrastructure. This is a very quick sort of timeline of what we've done. The portfolio was created as a separate portfolio in 2010. We had been investing in infrastructure before, but it was, I guess, grouped with private equity, which is quite common, was quite common at the time. So we've had a standalone portfolio since 2010. And in the last 10 years, we've effectively grown tenfold. So we started with about $3 billion. We're currently north of 30. And we have a trajectory to go to between 60 and 65 billion by 2024. And this is part of, I guess, a natural reallocation of capital between within the broader organization, and the key beneficiaries are infrastructure and private credit to a lesser extent. And so we've had very significant tailwinds in terms of capital being made available to us. And the great thing is that we don't have to fundraise. This capital is captive, so we're not a traditional fund manager that has to go and rattle the tin every few years to raise a new fund. This is captive proprietary capital. You've got a few names there of deals that we've done, including in the region over the last few years. Combination of we've done a lot of energy deals. We've also done a lot of transport deals. Just to give you, and then I might finish off with the broad view. At a high level, our portfolio includes airports that service around 93 million passengers per annum. Quite a lot less at the moment, obviously, given that quite a lot of those airports are operating at sort of very, very low levels of activity. We're quite a big player in the transportation sector through rail and public transport. About 3 billion of passengers use our services every year, just on the public transport, 3 billion for rail. Seaports, both container terminals and landlord ports, about 3.1 million containers, so TEUs, go through our assets every year. 3.8 million connections in terms of electricity transmission and distribution. And in terms of renewables, we're one of the largest institutional investors in renewables globally. We've been doing it for a long time. So we have about 9.4 gigawatt equity, and it's growing, by the day, equity capacity globally in renewables only, representing around 17.4 gigawatt hours of power generated. This is just wind, and solar is another 2.1 gigawatt of capacity and 3.9 gigawatt hours of capacity. And together, the businesses that we've invested in employ about 100,000 people globally. So just to give you an idea of the scale, and it's actually helpful, not because of the numbers, but I think it's helpful for us to remind ourselves of what it is that we do, which is we provide effectively essential services to populations all around the world, to the general public. And I think it's really important to be cognizant of this. It's our license to operate. This isn't just about returns. It's very, very, very much about our ability to contribute to economy growth, to provide essential services across the spectrum to populations around the world. And we generally are very close to government because of that. Infrastructure is generally extremely close to government because it serves that very, very key purpose for population. This is the map of what we've done. It's always helpful to sort of see where our assets are. We've done a considerable amount of investments in North and Latin America, also in Europe. The Asia Pacific presence is much more recent, but we've had some good inroads. We're about to announce something quite substantial in Taiwan, which I think the whole market has heard about in the renewable energy space. We've had considerable success in India as well, where we've built a roads platform, and we own two of the largest energy platforms in the country, Azure Power, which is a pure solar developer, about 7 gigawatt of capacity, and CLP India, which is a joint venture with CLP out of Hong Kong. And this is a more diversified utility kind of play. And maybe just to finish, mindful of time, we've invested across all asset classes, and so we're present across the whole spectrum of risk. From the lowest risk being PPPs, where we have a very significant portfolio and huge amount of experience, including in the region, all the way to the more risky assets on the economic side, so roads, airports, ports, and what I would call passenger transportation. So I guess that's the whole gamut of what we do. And this is a list of the people, a small list of some of the people we work with. We're very, very partnership driven, primarily because we're a long-term investor. So we invest, we're a buy and hold player. We have no exit requirements. We're not a fund, so there's no need to realize the assets. Everything is unrealized. And so that has made us quite aligned with, I guess, strategic players and long-term investors globally, which we think is particularly important in developing economies where you need to take that long-term view. And the last point I was going to make, and I'll leave it at that open, very open to questions if there are any. We're also one of the bigger players in the greenfield space. We have historically have had a very strong bent towards greenfield, which is unusual in our world. And we spent, considerable amounts of money building assets. One of the key projects that I can mention is we're about 3/4 of the way into building a $6.5 billion light rail line in Montreal, which we own 100% of. And we've developed that project from design to approval to procurement and now construction and then operation. And this is a very important example of our capability. And we tried to do that in New Zealand earlier this year. For political reasons, the project was put on ice, but it might come back. Now the election has taken place. That's the government's decision. But so we think we're particularly well suited to situations where there's a necessity to take development risk, and we're very comfortable with that. So I might stop there. I think hopefully that gives people a good overview of what who we are and the way we go about things.
Brilliant. Thanks very much, Cyril. And really interesting, in particular, I think the buy and hold and the green field, which is such an important part of that, the potential for learning from you and the fact that CDPQ manages 90% of its own funds and actually does the investment into these different countries. Really, really interesting. Thanks very much. Let me pass on now to Gary, who is from Manulife Indonesia. Gary, before Manulife, he was at Daiichi Life and Commonwealth Life. And before that was in commercial banking, CIMB, ANZ, BIMA Bank. And Gary is a homegrown talent. So looking forward to hearing more. Gary, over to you.
Hi, thank you, Jeff, for the kind introduction. Maybe from my side, I would like to disclose or present more on the opportunity from Indonesia side, and then try to look around on the industry capacity and capability, and also the previous historical pricing or market mechanism of the infrastructure fund. Hopefully we can get something out of it. Can you see my screen now, Jeff?
Yes, it's now up. Thanks.
Okay. So on this one, let me start with the map of Indonesia and then what we've been doing as an Indonesia as a country over the past 4 to 5 years. So you can see here, completed 92 projects with 35 billion US dollar, considerably a smaller amount compared to what Cyril has mentioned on his portfolio. But over the course of 4 to 5 years, this is the one that we have been doing. And then most of it is actually financed by the government. And then only a small part of it is financed by the private industry. So 16, 17, 18, and 19, we've been doing that. And then in 2020, we actually want to do more, but given the COVID situation, it got postponed. On the next 4 years, let me discourage the 2020 year. So 2021, 2022, 2023, and 2024, the government would like to require 477 billion US dollar for the investment. So if you just see the numbers, it's actually tenfold of what we've been achieved on the last 4 years. So this significance is important for our country. So we cannot do it in our own. We need someone else, and then that's why we need the foreign investors. We need the foreign institutional investors. We need the help from foreigners to do this. In terms of number itself, it's already huge, and then that's why if you see the breakdown, 42% of it is coming from private, and then the other would be coming from the state budget and the SOEs. And then the priority itself, it is said that the private business to business ones are actually the one that is going to be the priority from the government, and then PPP. Then after that, the SOE is coming in the picture. So this tenfold kind of investment requirement is the one that we really need to look at. The opportunity is here. Other than the macro side, we also need to look on the fiscal policy. If you see on the chart here, the trend line of the growth of the fiscal budget related to the infra is actually increased for next year. Given the COVID situation, we cannot really push all our bullets on the fiscal policy, but we plan to do it next year. But even though it is pushed, it still lack the power of ability to build for some more infrastructures. This can be seen by the earnings and then also the growth and the capacity of top big four construction companies. So this is the earnings of top big four companies. We have Waskita Karya, Bika, and then Adikarya and PTP. We combine together and then put it in the chart. If you see on the blocks here, the brown blocks, the earnings is volatile, and yet the growth is also following the same trend. So even though we have the investment, even though we have all the money in the world to build this 477 billion investment infrastructure, we are still lacking the capacity or the capability internally to build the infrastructure. So this is the one that we need to highlight as well. We also need the help for not only from the budget wise, not only from the financing side, but also from the operating side, because as an operator company on the construction side, the earnings is not there yet, and then that's why the cash flow is still important part of the company as well. Another thing that I would like to mention before we jump to the final pricings of the latest development of the bonds. If you can see here, this is actually the toll roads that is being divested from the companies. And then if you see on the fifth column from the left, which is the nominal value here, this is actually the how much you can sell the toll road or the assets to the other investors. And then in terms of pricing power, it's ranging between 1 to 1.7 times of book value of the toll road. So the pricing power is not really on our side at this moment. And then if we want to go for 2 times or even 2.5 or even 3 times of the book value, then the asset or the toll road needs to be very attractive, traffic needs to be there, and also the IRR needs to be high as well. But given the current situation, we need to be happy, and then we need to be settled as well with this kind of valuations. Nominal value ranging from 1 to 1.7 maximum is the most we can get from the divestment. So this kind of changing perspective or changing regime of valuation is the one that we need to consider as well. The next thing would be the pricing of the bonds. Some of the names that are related to the infrastructures, IIF Indonesia, and then also Tower Bersama, the telco industry, and then also PLN, which is the electrical company. Another thing would be the Jasa Marga, the toll road. This example of infrastructure company, be it in the toll road, electricity, it has a different spread or different pricing mechanism within the industry. If we see on the IIF level, it is really priced at the level where it gets into a lower yield, which is kind of expensive. But on the other hand, like toll road company, it is really priced on the different end of the spectrum. So we can get more yield on the toll road company. So this kind of spectrum of high expensive yield, low expensive yield, and then also on the high cheap yield, the spectrum is too high within the corridor of Indonesia infrastructure. So if we can really narrow it down, then it should be more beneficial for us in the industry and also more beneficial for the sustainability of the company as well. So that's one for the pricing power within the corporate bonds that will also help the cash flow of our construction company as well. The last part that I would like to show is the trend of the securitization effort that we have on our assets. If you can see here, we have 5 securitization on the asset that we have that is experienced in the capital market in Indonesia. The vehicles can be asset-backed securities, CIC, or in fact the infra fund. If you look at the investment yield, they're ranging from 8 to 10% level. Within the 5-year government bond, only ranging at 6 to 8%. Given the spread, we have the final investment spread at 48 basis, 30 basis to 140 basis. So the spread, investment spread for infrastructure in Indonesia is not really priced well. It's not really done well. One can be priced at the high end, and another can be priced at the lower end after stripping all the criteria. So this kind of high spectrum is also happening in the securitization as well, not only the corporate. So this big spectrum of pricings really cost us a lot of money to build these infrastructures. on top of that, the capacity and the capability of our construction company is not really there to finance all this to do this $477 billion infrastructure. So it's a big opportunity for us in the next 4 to 5 years, but it's a big ask for us domestically to do this by ourselves. I think I can close it there, Jeff, and then we can discuss more on the question and answers.
Excellent. Thank you, Gary, so much. Really interesting looking at sort of that overview of Indonesia and the size of the demand, and which seems to fit really nicely into CDPQs, OTPPs, and Manulife's sort of investment plans. But once you dig down into it, the challenges in each one of these areas, in each one of these projects, the differentials in cost of financing, the different mechanism instruments we need to think about in order to unlock some of this financing. That was really helpful. Thank you. So let me pass now to Trini So, who is Director of Compliance in Government and Public Affairs for Asia at Ontario Teachers Pension Plan. Before UTPP, Trini was with Fidelity Institutional Asset Management, BlackRock, and before that at Barclays Global Investors. So Trini, over to you. You're still muted.
Yes, got it. So let me try to share a screen with my presentation first. Hold on. Okay, and just wait. Okay, is it working? Can everyone see?
Yes, that's great. We can see the next slide on the right-hand side as well.
Okay, interesting. Okay, let's see how that works. So thank you for inviting me to this webinar today. I would like to talk a bit about Ontario Teachers Pension Plan. I've been with the company for about 5 years. I'm based in the Hong Kong office. And I look after two functions. I look after the compliance function, and I also look after the government and public affairs function. So I think my input today will be probably more from a regulatory and government side, which I think is at the heart of a lot of focus with regards to investment in Indonesia and around the region generally. I think there's a lot of geopolitical discussions as well too. So hopefully we can have a fun discussion. So just to give an overview of Ontario Teachers Pension Plan first, we have about $200 billion in net assets. We're Canada's largest single profession pension plan. And it is a fully funded defined benefit plan. We have, similar to CDPQ, we have over 80% of our assets that are managed in-house. So we do a lot of directs, we do a lot of infrastructures. In terms of employees, we have over 1,200 people. Most of them are based in our headquarters in Toronto, but we also have London office, Hong Kong office, and most recently is the Singapore office. The Singapore office is in fact only opened about 1.5 months ago. And our first employee in that office is Bruce Crane, who joined us from OMERS, and he's head of infrastructure. So it's the first time we have an infrastructure head based in Asia. And obviously, the intention is so that we could have a more global mindset in our investment strategy and be able to be more on the ground in terms of our investments in, especially in infrastructure for the region. As I mentioned, we're a fully funded defined benefit plan, which is quite unique. Going to the next slide. So we pioneered the Canadian model of independent governance and direct investing. I think that is one of our biggest draw with our portfolio companies. A lot of them actually would like to learn from us in terms of our governance model. And that is, in fact, how we try to create value with our partners as well. Our long-term perspective and strong risk management culture is what we pride ourselves in as well. and we try to do diversification through effective portfolio constructions. In terms of our investments, we have capital markets, we have infrastructures and natural resources, which, as I mentioned, Bruce Crane will be looking after in Singapore. We have equities, which can be both public and private. And then we have a real estate subsidiary, Cadillac Fairview, which is also going to set up in Singapore as well. And last year, we set up Teachers Innovation Platform, which basically is direct investments into what we categorize as disruptive technology. In terms of infrastructure, I like to say that to give an example of our current portfolio, we also have a lot of airports similar to CDPQ. So for example, in Europe, we invested in Copenhagen, Brussels, London City Airport, Bristol Airport, Birmingham Airport, and we also invested in Chicago Skyway, which is the toll road. We invested in Global Container Terminals, which basically operates 4 container terminals strategically located in the ports of Vancouver, New York, and New Jersey. Obviously, a lot of these investments, as you can imagine, have COVID implications. We also invested, very interested in Australia. So for example, we invested in Sydney Desalination Plant, which is one of the biggest plants in the world. And then most recently, we actually, from the Singapore office, actually, we invested in with Equus Development, which has been, partly investment with ADIA and other institutional investors. So as you can see from our Hong Kong office, just to give a concept of our footprint right now, our Hong Kong office has about 35 headcounts. Our Singapore office is recently set up. And from the Hong Kong office, we have capital markets, we have both public and private equities. And as I mentioned, infrastructure is mainly handled by from Singapore right now. Capital markets and equities will also be set up in the Singapore office. So it's going to be replicated in Singapore office and be expanded. And the intention is for the Singapore office to cover Southeast Asia, whereas for Hong Kong office, because of geographical proximity, is going to cover North Asia. So that's it for overview of Ontario Teachers.
Excellent, Trini. Thank you so much. And really interesting, again, 80+% managed in-house, this long-term perspective and focus. These kind of investors seem to fit so nicely with where Indonesia wants to go and the kind of financing that it needs, what Michael was talking about earlier in the session. And now we're gonna shift over to our panel session. And now we get to throw really difficult questions at the panelists and see if they can give us brilliant answers. So I don't know if you want to give it a second so the system can shift over so we can see all of our panelists. Otherwise, we only have to look at me, which is not very interesting. Brilliant. So let me start the questions while you guys are, we're shifting over. And lots and lots of really interesting questions here, but let me start with the elephant in the room. And maybe the easiest or the hardest question. Let me ask you to take out your crystal balls and tell us what happens next. So post-COVID, the world has gone crazy. The levels of debt in different governments are massive, and those governments are borrowing very quickly. These big infrastructure, many of these big infrastructure companies are seeing dips in revenues over this last year and may need to restructure debt, distressed assets. The world is a different place. So going forward, how does your business change? Or is it just business as usual? And maybe we can go down the line and maybe we can start in reverse order of your presentations and start with Trini, then Gary, then Cyril, if you could both comment on that question, please.
Sure. So I think, you know what, I actually check in with our economists, Milan in Toronto, to kind of get the official line from this. So this is very updated as I only got it overnight. So in terms of global debt, I think it's a huge concern right now. I know a lot of focus has been on this from our total portfolio fund management team in terms of just the whole portfolio structuring and looking at our returns. Emerging markets debt is fast approaching 210% of GDP, which is way up from the past couple of years and from the past decade. And obviously, this is something that we are very closely monitoring. So debt burden is an important factor in the deliberation of the country's investment prospects and all that. But with OTPP, like where our stance is that our framework takes a more holistic approach in terms of a risk-adjusted return approach. And basically, we try to use 5 main pillars in assessing the target exposure to a country. We look at return generation, diversification features, implementation capacity, competitive position, as well as risk assessment. So in the case of Indonesia, what we see is that we actually see a strong multi-decade economic growth run that is expected to continue into the medium term as one of its strengths as a prospect. And I think overall Asia has that advantage as well too. The key structural tailwinds for growth include strong projected middle class growth, healthy demographics, increasing urbanization, potential for further growth boosting reforms. All of this are quite positive for the country. It's also a very good diversification potential for us when we look at our total fund at a total fund level, because it is a relatively close economy compared to where we are. So right now we're very exposed, for example, to North America and all that. So that screens as a very positive thing, especially at this moment.
Great, thanks, Trini. Gary, what would you add?
It's a good overview from Trini about the global side, but in terms of the local side, if I can say, it's gonna be tough for the construction company to increase their debt at this moment. Very, very tough. And then because even before COVID, the net gearing, the debt ratio of our construction company has already been high. And then if they still want to increase their debt, that they will pay a very high price for the project. But in terms of growth basis, we cannot really depend on the foreign direct investment at this moment, because not only Indonesia is impacted of COVID, but all the countries in the world also impacted of COVID. And then the easiest way to spur growth next year to increase their internal budget and then try to more on the infrastructures. Say in the next year, everyone is going for infrastructure domestically. They will not be having more money to be invested in the other country. So we really need to depend on ourselves for the next 1 year at least. Then that's the case. It will not be as much as being demanded, the one that I presented previously. So more into like business as usual for the next 1 year. But after the next 1 year, I do hope the spur of investment, spur of money coming to Indonesia is more. Then the company can invest directly to the infrastructure. But in terms of local construction company, it's more into a business as usual. We just do refinancing on the current debt. We cannot go even higher in terms of increasing more debt unless there is a injection on the capital from the government.
And which is going to be difficult as the government's own capital is a little shorter than it used to be, and allocations toward infrastructure are going to be even less. Yeah, it's a really good point, and that the whole vulnerability of the sponsors is going to be an interesting challenge. Cyril, any other wisdom?
Thanks, Jeff. I think I might bring a more optimistic perspective into this if I can. I think everybody acknowledges the challenges at a high level in terms of public funding and also SOE funding, particularly in Indonesia, and that's been the case for a long time. So, in fact, that's why this initiative that the government is sponsoring is particularly important. It was important before COVID. I think it's equally, if not more important, post-COVID. I think the silver lining to me is, however, that I don't think the level of I think the level of tolerance of extreme public funding and extreme public debt has grown, and I think there's been a quantum shift with regards to the way people look at monetary policy, look at fiscal policy and budget policy around the world, because the world has just moved into a different place, and governments have had to react and open the floodgates with regards to funding. So I think I'm not entirely sure what it means. I'm not an economist, but there is clearly a shift change with regards to how that works compared to where we were 10 years ago. That's my first point. The second point is really focusing on what people want to do. It's now very, very clear that there is no yield coming out of the Western world whatsoever. And there probably won't be any yield for the foreseeable future. Possibly, our generation might never see yield again on government bonds. Or quasi-government bonds. So in that context, wherever there is yield is going to attract massive amounts of attention from the rest of the world. And I think Indonesia is extremely well placed, particularly because of the fundamentals, particularly because of the growth trajectory that it's been on for a while in terms of population and economy and reform and liberalization. So I think there's a very interesting combination of events here, which, if well managed and captured effectively by the key players, including government, offers incredible opportunity. And we're among that sort of tidal wave of institutional capital looking for yield. And we've all made really good money in the last few months out of rates coming down. Therefore, the value of those bonds going up. And now we're done. I think in terms of returns, it's time to move on. So that search continues and will expand into new areas. I think emerging markets are clearly on the radar and have been on the radar. So I think the funding is there. It might come from different places, but the funding is there. And I think what Indonesia is doing is clearly the right thing to do. I think there's probably more innovation that can be brought into the market, and we hope to help. There'll be new models being developed, but Indonesia has been very, very progressive. So I think it's actually quite an interesting picture, and I'm quite optimistic.
Excellent. We like optimism. And I must say, from the World Bank perspective, we see, I think there are a lot of things, horrible situation and horrible context, and yet huge opportunities. Government is very, very aware of how much it needs to mobilize from the private sector. It's no longer a nice to have. It is now a must have. And we see governments across the region, across the globe, really opening up to this reality. And because of the crisis, they're able to make changes that they normally couldn't make. And you see this in the omnibus law in Indonesia, right? An aggressive, big step forward by government, pressing into the space, and risky and challenges and lots of nervousness and a lot of issues, but a desire to move forward and step forward. And maybe I can transition to the next question. What does it take? And looking at the maps that you guys put up of the different investments that you've made, most of those are in Europe and North America and places where things are more settled and regulated, and you can understand why the money naturally flows in those directions. What does Indonesia need to do to make itself more attractive to institutional investors? And maybe we'll start with Siri, because you started it on this conversation, and then go back in order to Gary and Trini. What does Indonesia need to do to attract this? What structural reforms, what little bits, what needs to happen? Siri, over to you.
Thanks, Jeff. I think it's worth acknowledging that Indonesia has done a lot already. And it didn't just start in the last 2 years. It's been going on for a long time. So there's been a lot of sectors that have been liberalized. If you take the toll road sector, there's considerable local and foreign capital that's flowed into this sector, and we expect to see more. There's more coming into the port sector. We're currently discussing with the local partner through our DP World platform, the greenfield development of a new container terminal in East Java. I think that's public information. It's quite a large project. It's very exciting. This is not something that could have been done 10 years ago. So I think we need to be fair to the Indonesian government that's been working very hard on clearing the pathways across the board. I'm sure there's more things that can be done, but I don't think it's fair to say that Indonesia is particularly difficult to work with in terms of FDI in general. I don't think that's true. No, it's no longer true anyway. Maybe to answer your question more directly, beyond that, it's been clear to us for years that the infrastructure space in Indonesia was essentially or predominantly the purview of SOEs, which is fine. I think wherever you go around the world, SOEs have a tendency to be a natural conduit for infrastructure development, and Indonesia is no different. So there's nothing shocking or unusual about that. And I think, to be fair, that the SOEs have done a tremendous job in building up infrastructure, particularly in the last 10 years. It's been extraordinary, and the pace has been unprecedented. So it's great, but it gets to the point where it probably needs to move to the next phase of the cycle, clearly, where private capital needs to take over. And I think the government's idea of recycling capital, I think, makes more sense, and we've been in discussions with government for more than 2 years on this. Makes more sense than just trying to. I think we all go to a lot of conferences where we always get the same question. There is so much greenfield opportunity, there is so much capital out there, and I know the World Bank is, it's one of the key themes you guys are trying to address. Why are the two not meeting? To me, the answer is quite straightforward. It's not necessarily the natural place for private capital to go and develop, greenfield infrastructure. We love to do that CDPQ, but we're a rare beast, and we only do it in specific context, to be fair. It's more the purview of government to go and build those projects, but that doesn't mean the government has to own them forever. So I think that it's completely logical and compatible. And one of the great examples in this region is what Australia has been doing for the last 10 years in terms of having a formal capital recycling program where the federal government will come in and contribute funding every time the states actually release capital. So for every, it's finished now, but for every $1 that the states would release, the federal government will provide $1 of funding to supplement whatever had been realized through those sales. And it's worked extraordinarily well. If you just look at the numbers in Australia, after many decades of very little by way of infrastructure development, it's boomtown now. It's so much so that it's testing the capacity of the EPC market, of the developers, of government agencies to approve and review those projects. The pace is extraordinary. So I think what the government's trying to do in Indonesia is similar to this. And if it's able to be managed, properly within a volume, I think that's going to be a complete sea change in terms of the way private capital plays, and it's definitely the right way of doing it. So, and we've been very engaged with government over the last couple of years in trying to help with that. It's a very live topic right now. There might be some people on the call who are involved in that effort, and so we're very keen on playing a role.
Excellent, thanks. So same question over to you, Gary.
Yeah, it's good questions, because currently what Cyril has brought up as well, SOE being the lead front runner for this kind of projects, and then we really need to differentiate. Most of the SOEs that's been doing the construction business here is actually a public company as well. So there is a conflict of interest. If you are a public company, then the value creation needs to be there, IRR needs to be high, the return needs to be there. But on the other hand, most of the infrastructure projects, the return may not be immediately affecting the project. So the time horizon is different between SOE who is public company and also SOE who is a private company. And then trying to distribute the projects equally or in a fair manner between SOE public and then SOE private and maybe the PPP. It needs to be not highly regulated, but it needs to have a fair assessment on which projects needs to go to whose budget. And then another one would be coming from the foreign institutional as well. If we can also do financing in a different currency, say the US dollar, we need a stable currency environment, US dollar and rupiah, because the IRR for each currency is also different. So this stability of currency is also playing an important part. Another thing, the last part would be the one that I also mentioned during answering the previous questions. If we can put more capital on the SOE public companies, that would be great as well. Because if we compare our SOE construction companies in Indonesia with the other SOE regionals, the capacity, the capability is way different. Execution-wise, we are almost there, but in terms of capacity, in terms of scale, we are completely lag behind. So adding more capitals on the SOE public will be one of a good start for us.
Yeah, and I guess that's what Celia was mentioning, that sort of evolution from the very SOE dominated model up to the next where there's much more private engagement. As the SOEs reach the end of their balance sheets, right? They've done so much to mobilize funding for the sector that it's going to be difficult for them to support Indonesia to this next level. Trini, same question to you, please.
So I think we share the same concern in terms of working with SOE and within Indonesia as well. Currency stability is definitely at a country level is of concern for us. Consistency of the policies, and then also how we work with the local levels of operations is something that we look into quite detailed. So it's always been a core focus when we do our due diligence process and our investment team. That is always one of the questions that we focus on. But I think the other points are already covered by the others.
Okay, excellent. And so I think that's really interesting. The sort of the nature of that engagement and what Indonesia needs to do in order to step up that next level and address these different issues. I wonder if we could dive down into a couple of the different sectors. You mentioned roads and ports. We've had a couple of questions on the Q&A about renewable energy and what that looks like. And also on social infrastructure and where you're not looking at more market-based revenues, but looking at more government payment stream. Could you give us a sense of what you see in specific sectors and the kind of structures you would like to, and I think Cyril mentioned that greenfield is not necessarily your daily bread, but it's something that this group actually of investors is quite unique in its focus on infrastructure and the willingness to go into greenfield. But is greenfield really just a small slice? Would you want to do greenfield in Indonesia, or would you like to see more existing assets and recycling existing assets? So basic question is sector and sector issues and structure. What kind of structures would you like to see? And maybe we can go back to Trini, then Gary, and then Cyril, please.
So I know that for now, because I think we're quite new on the ground, and just in terms of resource base, we're just starting to build.
Sorry, Trini, we've lost you. Okay, let me go on to Trini. Sorry, we missed that whole bit. We got a glitch in the bandwidth. Would you mind starting over, please? Okay, now I'm not hearing Trini at all. So maybe Gary, would you mind stepping up, and we'll go back to Trini when she gets back.
Thanks, Jeff. So for us, the sector mostly that we would like to do more on the brownfield, if I can say, because it has less time on the development, and then it is clearer in terms of the terms and also the time horizon as well. But the one thing that I need to mention here is the previous historical securitization that we can participate in Indonesia, mostly as long as 5 to 7 years, of which we need a longer time horizon of asset instruments. So it's not only the structure, but also the time of the project. If it's sustainable, it's even better. It doesn't have any period, then we can just finance the project continuously without any time horizons. Yeah.
Great. So when you said sustainable is better, does that mean if it's not sustainable, it's okay?
Good one, Jeff.
Okay, Cyril, sorry, same question over to you. Sectors and structures, what would you like to see more of? What are the things that you're most excited about?
That's a good question. Thanks, Jeff. Just before I tackle that, just on currency, and we might be a dissonant voice in the overall concert, but we're completely fine with investing in local currency, and we've been looking at a number of deals over the last couple of years in Indonesia, longer than that actually, and all those are Indonesian rupiah. The reason being that we take a long-term view at a portfolio level that over the long haul things generally revert to the mean, and the value of hedging in the process is generally zero and costs you a lot. But it's a question of scale and sort of investment horizon. If you're an infrastructure fund and you're in US dollars and you've got a 5-year investment window, 10-year life, obviously it's a much more different proposition because you might get squeezed. So it's one of the benefits of the way we look at this.
So would that be debt and equity, or is that specific?
Yep.
Wow.
Yeah, it makes no difference. Look, any asset. I mean, we look at currency as an overlay. We manage the risk at a currency level, not an asset level. So we separate the two, very, very distinctly. But we don't hedge. So that's that. In terms of sectors, look, I saw a lot of questions in the Q&A log about renewables. It's a tough one because I think it's important to recognize that Indonesia probably isn't as well endowed with renewable energy resources as some other places, particularly the more conventional ones in terms of wind and solar. It's not geographically the best place in the world to do that. There are places that are much more suitable. And so when you look at the levelized cost of energy long term, it's not as compelling. And there are other challenges as well in terms of land availability and terrain and all sort of stuff. So I think that needs to be recognized, and it is what it is. It's got other assets, obviously, in terms of geothermal potential. It's very significant. There's already been a lot done there. It's not without risk, as people in my old firm, Marubeni, has learned that, over the years, in terms of, the risk of, developing geothermal energy. It's not straightforward. But, there are other technologies, hydro, often quite challenging, but there's a lot of hydro resources in Indonesia. So it's not necessarily that straightforward. And historically, the focus in terms of development was primarily on thermal, particularly coal. So I think there needs to be a shift in government policy. I think it's a misnomer. I think people quite often miss the point that it's not the investor who prescribes what technology is being used, because the only way to sell power in Indonesia is to have a long-term offtake agreement with PLN. PLN will drive what they want. And so it's not up to us to say, well, I'd like to build a 2,000 megawatt solar farm. If there is no offtake, there is no investment, and we don't decide as to what technology is going to be used. PLN does. So I think it's a question more for government and for PLN in particular as to what they want their portfolio to look like. And that's I think that's just the way it is. And historically, it's been but it's changing. Obviously, it's been very heavily focused on thermal, primarily coal and gas. So that's renewables, and things change. Things, government policy changes quickly. We've seen that in North Asia. Very rapid movement in Taiwan and Korea. Very, very rapid. So that can change. Social infrastructure, if I may, is a space of great interest to us, partly because we co-own the largest PPP developer in the region, a company called Plenary Group, based in Australia, but also active out of Singapore in a variety of Asian markets. And we've looked at a lot of projects in Indonesia in the last couple of years with Plenary across the board. The PPP framework is evolving. Government is very, very focused on that. They're doing a lot of great work. Again, not trying to lay a heap of praise on constantly on the Indonesian government, but honestly, setting up a proper, functioning, sustainable PPP framework is not easy anywhere. If you take Western countries like France, it took them 10 years to get the balance right. Australia took a very, very long time. And that was with the example of what happened in the UK, which has been used globally as the example of what you should do, rightly or wrongly, actually. So I don't think it's shocking that it's taking some time for places like Indonesia or the Philippines in getting that right. But once you get it right, then it becomes more of a cookie cutter sort of approach where you can actually roll out projects very, very, very quickly and very effectively. So, I think there's great potential in doing that in Indonesia. I think it's a very logical thing to do, particularly in places like health, education, where there's massive amounts of needs in terms of new infra being built. So it's coming. We're very, very, very happy with that. So I think that they're probably sort of key areas I wanted to talk about. I think transport, we've talked about. Transport has been a natural go-to area for investors because it's correlated to economic growth. And therefore, it's logical, if you believe in the long-term potential of a place like Indonesia, to want to be part of that and benefit from that growth. So you will continue to see a lot of action in ports, airports, roads. I think the real challenge, if I can voice a small, not criticism, but make a comment on airports, the focus historically has been more on the smaller airports in terms of private sector participation. And that might work for some. We're on the larger end of the spectrum in terms of what we do because of our size and our growth ambition. So what we've seen coming out of Indonesia has been generally too small for it to make sense for us. And just to answer your last question, Jeff, and then I'll stop a lot because I'll stop there because I've used a lot of the time today. We have no problem with greenfield. It's just a question of context and platform. So it really depends on how it's procured, how we can approach it. But we, it's as long as the framework and the context is set properly, this is something that we can manage.
Great. And just to voice a couple of the other questions, when you talk about social infrastructure, low-income housing as well, something like that would be.
Yeah, I mean, look, we've got experience in that. We've done housing in Australia. We're currently looking at low-income housing actually right now in Australia as well, and also New Zealand. I mean, all these are fairly well-trodden asset classes. These are things that have been done in a variety of markets. Fundamentally, there's no particular sort of difficulty from a technical standpoint. It really comes down to what does the framework look like? What's your revenue risk? How do you manage the interface risk? Who bears the, how can you sort of externalize the facilities management risk to someone who's better placed to handle that? All sort of stuff. But these are standard questions. They've been addressed in a bunch of other markets. This is not specific to Indonesia.
Yeah, and then the other Q&A question was about airports. And you talked about airports, and this was an interesting area, but is this the right time? What do we do with the fact that, traffic has gone off a cliff? Do we wait a while? Indonesia has several different airports that they are in process or planning to put up. What do you do with that?
It's a hard question because there are airports are not a homogeneous asset class, and you can't compare what drives traffic at a place like Heathrow versus what drives traffic in Lombok or Komodo, just to take local relevant examples, which will be, almost essentially driven by tourism versus, hub style traffic, business traffic and things like this. And the level of maturity of traffic will vary enormously. So it's a tough one to answer. You would have to look at the specifics of each airport. It's tough because unlike a lot of other assets in the transport sector, such as public transport, roads, where you can be quite confident that long-term things will go back to normal. You might have a small value destruction in the short term, but long-term it should be okay. Airports have different dynamics, and there's that question about, as we will see a significant change in the way people travel on the back of this epidemic, and nobody's got the answer. I certainly don't have it. And whereas, will people start using their cars again to go about their business? Yes, they will, and they already have actually. In most markets where lockdowns have been lifted, like China and India, for instance, traffics have gone back to close to 100% of what they were pre-COVID. So if you let people take their cars, they will drive. For airports, I think it's a little bit more difficult. So I don't think anybody knows, quite frankly. Having said that, lead time is a major problem with airports. Typically, people let airports be completely swamped and operate way above capacity before they start, looking at expansions or new assets. Maybe this is an opportunity to look, beyond that and try to build ahead of time. Not easy. Very few places do that well. I think Singapore is one where that's generally done, well and well planned. But maybe this is an opportunity to do it better.
Excellent, thank you. And it looks like Trini is back. You've overcome the technology challenges. And I'm afraid we missed everything that you said earlier. So if you could repeat what you were going to say, and then the questions about sectors and structures, where you see the opportunities, and what are the things that really excite you in Indonesia in this space?
Apologies for that. Hopefully the internet connection can stay put this time. In terms of sectors, I think our head of Asia, Ben Chen, he's based in Hong Kong. So he's made it very clear infrastructure is obviously a focus for us, but just to have more of a macro view as well too. Aside from that, private and public equity in well-run companies are also one of our core focus. And then real estate in terms of partnership basis, especially I think from our Cadillac Fairview, which is our real estate developer that is due to be set up later this year in Singapore, will also be very keen in terms of the potential of this market. So like you were saying about, low income housing and all those kind of developments will be something that I think teachers would be interested in.
Excellent, great, thank you very much. So lots of really interesting questions coming in on our little Q&A bit, and maybe just there's a lot of interest around the potential of the institutional investors and the opportunities in Indonesia. And maybe you could take us down to the next level of detail. When you look at an investment, what are the criteria? What are the key things? What gets you excited about an investment? And what are the big alarm bells? And I realize this is your daily bread, but the people watching this is all really, really interesting and really useful for them and really inspiring for them. How would we understand better how your organizations look at investments, look at opportunities, and make those investment decisions? And maybe we could start with Gary, and then Cyril, and then Trini this time, please. So Gary, over to you.
Yeah, the first and foremost for us, the liquidity. In terms of liquidity profiles is very important for us, because I'm moving the kind of active markets, and then we also invest on behalf of policyholder as well. So if say there is a liquidity event that needs to be fulfilled from our policyholders, need to be able to do so, even though infrastructure would be on the last effort kind of basis should we want to. So liquidity is number one. Another one would be the risk profile. In terms of credit risk, how does the investment compare with the other public investment record? The pricing or would the spread be justified? Should it be coming for infrastructures? And then also the tax cut as well. It's quite tricky for tax. If we get it if we get the return as part of an income basis, how should it be taxed? Should it be taxed as an income, or there would be another subsidy or kind of a relaxation from the government with regards to the tax on the income from infrastructure projects? We have also the what you call it, a push from the government to invest in infrastructures, and then mostly of our assets we need to fulfill the 30% cut if we want to stay within the regulations. If we can put the infrastructure projects, or if we can put the infrastructure assets as part of the 30% cut or threshold from the government, that would also be good.
So that's the 30% of your assets that should be invested in government.
Yep.
Treasuries, right? And that
Yep.
you'd like to see infrastructure as part of that 30%.
Yeah. Yeah.
Is that right? And then you've got what is it, a 10% for infrastructure?
Yes, the maximum we can do is actually 10%. If we can relax that one as well, that would be great. But,
okay.
Yeah.
Interesting. That's some very interesting government dynamic in order to help you, get those bigger. And do you see government as being, is there anything missing in this discussion? Do you think this is all, because Siri gave us a very positive, how the government is evolving, and which is great. And I think that's very true. And we do have a tendency to complain a lot, but all in an effort to help government see what it needs to do next. Where do you see government? Is there anything that government needs to do next in order to bring you into more of these infrastructure investments outside of this tax issue and the regulatory issue?
I've got two answers for that one. First one would be time horizon. If the government is open for longer time horizons, that would be great for the industry as well. Another thing other than the time horizon would be the project allocation. It's an important part. How much should go to private? How much should go to public? Right. And then which ones? Which ones are the most important one? Because we don't want the private only get the smaller piece of the project or the less popular projects.
Okay, excellent. Thank you so much. Siri, if I could pass on to you, please.
Sure, Jeff. It's a very broad question you're asking. I'll just try to take one angle to answer it in a relatively quick way. We're generally not a single asset investor. We're generally a platform investor. It's a question of size and ability to scale up. And for us, the cost is as much about opportunity as it is about anything else, quite frankly. So I think doing things in a structured way is particularly attractive to us, and therefore the discussions that we've been having with government in Indonesia around the monetization program for SOEs, we've been angling particularly on roads because we think that's probably one of the more transactable asset classes in Indonesia. We find that interesting because once you've actually set up a vehicle that's capable of doing this, and you've got a pipeline of assets that can be put into this vehicle, there's still the question of, at what value those assets will be transferred. That's always a question. But once you've done that, you can actually scale it up. You got a conduit that's available to actually do this. So for us, it's more about the structure and of the vehicle that's being created than the asset itself. But at a fundamental level, it's always the same question, which is, are you comfortable in the long-term stability of your income for it to be infrastructure and fit in the portfolio? And typically that means you need either a strong regulatory environment, which is the case for roads, where you're comfortable that you won't get bypassed, that you'll be able to fix the tolls within the prescribed regime in terms of inflation linkage and all the rest of it, and that whatever capex you put in there will be rewarded at the same level, or you have long-term contracts with regards to your offtake for energy and things like this. But I think those parameters are generally there in Australia. In Indonesia. I don't think there's anything inherently wrong in the way it's been structured. I think it's there. And if you look at the IPP program, for instance, Indonesia has had a very successful IPP program over the last 20 years. There's very, very large private sector participation across all technologies. And it's been there because there's been a very strong framework with regards to offtake by PLN. Things have changed over the years, and that's a natural evolution. It's stretched the rubber band in some cases, but things go back to a natural equilibrium. So it's worked really well, and it's delivered large amounts of capacity that Indonesia needed in a very cost-effective way. So this is a good example of what works. Things could be done similarly in other sectors if that's what Indonesia wants to do. So I think that's probably the way we would approach it.
Brilliant, thank you, Cyril. And Trini, same question to you.
Okay, so I think what I will focus on is just the investment philosophy and the companies that, or the investment opportunities that we tend to look at. We actually have recently been asked to kind of consult with Southeast Asian governments in terms of what we're looking at, because they want to see what teachers is interested in when they approach us. And we've actually did a cheat sheet, which gives a summary of the criteria that we look for. So I think, especially when we touch on a lot on SOEs today, we look a lot at establishment, the need to adopt the highest level of international corporate standards. That's something that we really focus on. And it's not that we expect it to be existing at a get-go, but it's more like a goal that we want the company to definitely have make an effort into working towards. Independence and management, entity role and objectives. So, having a clear mandate, definitely investing in investment vehicle that have a clear profit motive, and then capital flows as well is something that we're very focused on. So, for example, asset transfers between and outside the structure need to have a very transparent mechanism. And our exit strategy and all that, we hope to have kind of the discussion up front as well too. It is difficult to balance a strike in the selection of assets coming in, and then and just the balance of power with government as well too. So so kind of clear process and logic in terms of what we're investing into is what we hope our focus to be on.
Excellent, thank you very much. Now, I, as World Bank, of course, I have to be very disappointed that nobody mentioned environmental and social criteria, the importance of gender, but I'm assuming all of those are just assumed in everything that you guys said. One last, and we just have a couple minutes left, but can I throw one more question at you guys? And maybe we'll go in reverse order. I think if we do Gary, then Trini, then Cyril, we will have done every single combination of the three panelists. But the last question is on the Sovereign Wealth Fund. And Cyril mentioned the platform and the importance of the way investments work, and that the platform was much more interesting than individual investments. Does the Sovereign Wealth Fund have the potential for being such a platform? And do you have any advice for the team in government that is currently setting this up and designing it? What would you give them as your number one priority for them to consider when they're setting this up? So if I could start with Gary, please. And then once we're done with this question, we'll let you guys go. You guys can take a deep breath. You've been fantastic. But we'll after this will be your last question. So Gary, please.
Thank you, Jeff. Just to be clear, these sovereign wealth funds, we Indonesia is actually the investee, not the investor. So the perspective needs to be clear first. The one big advice for any kind of funds, we take a look on the people behind the funds, and then just really want this to be sustainable, and then be any kind of administrations. This fund needs to survive. Not only survive, this fund needs to be made. So this one would be not a 5-year kind of project following the administration, no. So any kind of administrations need to adhere, need to also focus, need to also maintain the same fund, the same philosophy, the same goal of the fund. So this needs to survive on multiple administrations. The other part will follow on the answers that I've been providing on the last questions. But people is the most important part, and also the commitment throughout multiple administrations.
Excellent. Thank you very much, Gary. Trini, I think that's over to you next, please.
Yeah. I think from our perspective, again, is the management structure will be a focus for us. So, for example, stakeholders, the government, the board of directors, and executive management need to be aligned with clear goals, clear roles and responsibilities that doesn't overlap. The chosen model needs to not have conflict of interest. That needs to be a focus because. And so the initial structure will be quite important in terms of how it can promote efficiency and also avoid unneeded inefficiency, basically. Independent professionals on the board and management team is necessary to add credibility. And I know that's something that we always look at from a teacher's perspective. Hopefully management can have recognized expertise, local and global knowledge, be able to operate with freedom in pursuing their mandate as well, and be held accountable for decisions being made. So just having a clear mandate that stands the test of time and that management can achieve would be our recommendation.
Excellent. Thank you very much. And Cyril, your thoughts on the Sovereign Wealth Fund?
Thanks, Jeff. Look, it's a very live topic, and it's been a live topic now for quite a long time. I think just to maybe place the whole SWF initiative in its context, I think there might be a slight misnomer. I think the SWF is not going to be the vehicle where people will invest in. It's going to be a co-investor with private capital into those platforms, and therefore it's effectively a crowding in type strategy that I think is a great idea that the government has been pushing now for a little while. Having said that, I think the points that Trini made about governance and professional management are very, very important. But also you'll need to look at what's going to be the governance arrangement within the platforms. So it's not just the governance of the SWF, it's also the way the SWF is going to be exercising its governance when it co-invests with other funds or other international investors. If I had one piece of advice, I think to give, it would be like there are multiple avenues, there are multiple ways of doing this, there are multiple models out there, including things like NIF in India, for instance, which is something that I know the task force has been looking at for a while. There's many ways of skinning that cat, but I think it'll be worth picking one, trying to make it work on a certain scale. Nothing's forever. Things can actually be reviewed, or you can change direction or have another vehicle. Once you've actually set up the fundamentals, things will evolve over time, and you'll have different types of investors wanting to come in as experience and comfort grows. But I think it's probably good to actually get it going and have some early wins and then build from that. And then the direction might actually change a little bit over time as you build more and more of those vehicles. And I think that's what I like about the iterative nature of the model. And it's not just about infra. I think it could be any kind of asset class now. The government's looked at, the tourism industry, the health industry, which are not traditional infrastructure asset classes, but that works equally well with probably a different construct. So, and the other piece of advice will be, look, if you might be narrow, but if there's one asset class that might work and you can actually get it done quickly and get the pump going, it will be worthwhile doing it, as opposed to trying to do something which is very broad and caters to everything. There's always that tension between trying to be very broad and broadly encompassing versus getting something done quickly and very pragmatically. So I think it's just trying to find the right balance. But I think the guys are doing a great job in sort of navigating that line.
Fantastic, thanks. And I couldn't agree more. I'm really impressed with the way that team is putting the thinking together, you know, seeing these things being developed all over the world. And there tends to be a sort of linear, this is what we're going to do. And completely agree. You've got to look around, figure out what other people have done, learn from all the things that have gone before, and be willing to change, right? As you move and you realize that you need to go a little bit more left and a little bit more right, to be willing to do that. Above all, to be pragmatic. I think that's really good advice. So we're just a couple minutes over, apologies, but thank you so much to the panel. You guys have been fantastic, super interesting. This is such a live space in Indonesia, such opportunities, and it's great to get your advice and your feedback. And I wish I need to have a little applause button on my laptop, because otherwise you can't hear people applauding you. But rest assured that everybody on the call is applauding. This has been really, really interesting. Thank you so much. And let me hand back over to our MD, to Farah, please. Thanks.
Thank you very much, Jeff. Thank you to all speakers and our moderator. It was a pleasure to have you all with us. And we hope everyone who watches enjoyed this amazing discussion. And before we end this session, we ask for all the panelists to do a virtual photo session, which will be taken virtually by the committee. Please make sure your position is in the center of the frame. Everyone's ready? Okay. Counting down in 3, 2, 1. Okay, one more. Counting down in 3, 2, 1. Thank you very much, everyone. And for all the participants who wants to get e-certificates and presentation materials, these are the procedure that you should do. First, please scan the barcode on your screen, then fill in the form provided with your complete personal data. The names written on the e-certificate will be based on the data you have submitted. E-certificate and presentation material will be sent via email no later than 10 working days. Please make sure the data you submit is correct, because an incorrect name and email address is beyond the responsibility of the committee. And don't forget to join the digital exhibition and conference of Indonesia Infrastructure Week, Konstruksi Indonesia and Beton Indonesia 2020. This digital platform can be accessed through Digital Infrastructure Connect platform from 21st October to 3rd December 2020. Register yourself at infrastructureconnect.id to gain access and win an attractive door prize. And for more information, please contact us at connect@tarsus.co.id. And that's our webinar event for this time. See you again at the next Infrastructure Connect digital series. Once again, thank you for joining us today and best wishes for all of us. Thank you.